going into our afternoon and then into the end of this week. Now as you can see here on the ES, we are inside of these massive daily extension long levels. And inside of that, there are these huge traditionals. The red lines that you see down below us here are unfilled gaps. Now, the question is how do we identify the liftoff away from the support level if there's going to be a continuation of a rally versus a market that continues to dump right through these support levels? And that's what we're going to talk a little bit about today. Today is the 8th anniversary of the VIXplosion of 2018. And what that day showed us was that volatility became the leading indicator, really, for the broad markets. And the ES used to look a lot like the VIX looks right now in the intraday timeframes. You can go back here to 2018, and while this doesn't look like much, at the time, it was a huge, huge day. And it came from an old contract lows to a new contract highs, defending a support level. And what was really interesting about that support level is that we have never, ever gotten back down to those levels since 2018. We never have breached them. Every time we came back down to that original support level that we had starting from the VIXplosion, this is actually where Powell, his first day of being the Federal Reserve Chairman as well too, we never breached through those levels. That's an interesting, an interesting fact. What you can see here from the VIX is that we are in a downtrend. But the question always is how do we know that there's not going to be a larger squeeze into resistance? Could we even come into a halfway back short from our highs in 2025 that we had in September to lows? We've dipped into this previous high up here. And what we're identifying right now is where the markets could continue to rally, or where the VIX could continue to rally, but more importantly, where its rally ends, where it's confirmed it's potentially over, and it creates a point of a liftoff point on the indices. And that's what we're going to start with here as we're going into our afternoon. Now, I don't have any of these other counter trends that we've been inside of this week drawn up. I'm going to a 4-hour chart here, and this is the old contract lows, the old January contract lows to the new contract highs. We had a stick save of our line in the sand going into our Monday afternoon, going into Tuesday. And then Tuesday's lows to highs defended support levels once and twice to profit targets. Now, if we're going to continue this trend, you would expect it to go straight up through the resistance. Now that we've dipped into this previous high, if we fell all the way back into the middle of this range again from our lows of the week to highs of the week, we would not expect that there would be anything there now that we've dipped into these highs. And so many times in history, we will have a situation where we will start to defend this series. And where was the bottom of the series? Well, there are two pullbacks that we had here. One you could make a case for was the Wednesday low. We also made a new pullback as we were going into yesterday afternoon. Those two targets were hit. But if we're using the lowest low of this series to the high, we bounced off of these support levels at 9:30 this morning, or I should say 9:45 this morning. And we were anticipating that support level correlated with the half gap fill. The reason that we were anticipating only a half gap fill today is that there was an edge to the half, but there was no edge to the full. And so as we're going into our afternoon timeframes, what this really represents up here is that if we don't defend this series and go straight up into this VIXplosion type of situation, this stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.